So everyone, thank you for joining. Today we're joined by Peter, who's the CEO of Ampersand Accounting, and Stephen, who is the COO. These guys are going to be talking to us about US sales tax.
Within districts now, what's been going on, because it was unregulated, specialty groups would go in and form specialty districts for taxation purposes, without the proper credentials, without the proper setup or anything else. The state just assumed it was accurate and said, okay, we're aggregating this into everything else as well. And they never really challenged or question it. This is the complexity that is US sales tax. When you hear them saying 40,000 different districts, and each one of those districts are unique, and they also have tax, different policies, and so on and so forth. So, the reason why we're here and the reason why all this is relevant is because of the pain that even we go through in the United States dealing with our own tax system.
People saying, look, I'm an Amazon seller. I'm a UK-based Amazon seller, but I sell in the US. Doesn't Amazon do all this for me? Like, do I need to worry about sales tax? What's the sort of answer for those guys?
That's a great question. And I'm going to give a scary answer. I apologize in advance. So let's talk about marketplace facilitator. You'll hear that buzzword thrown around a lot of communities. And everyone's like, oh, I'm safe because this buzzword marketplace facilitator. That's lack of understanding of what the overall product is and what it does. Effectively, marketplace facilitator benefits Amazon and the marketplaces. It doesn't benefit the third-party retailers. And we go through and actually read the law behind all this, which is 100+ pages stacked and all kinds of fun things. When you read the law, with the exception of Texas, all the other states give Amazon all the benefits and none of the pain. The pain still resides on the third-party retailer, regardless of what Amazon's doing. And what I mean by pain, I mean that if, as a hypothetical, and this is the insanity of US tax market, if you would, if Amazon miscalculated the price, it still falls on your business's shoulders at the time of the transaction. So in other words, if they didn't properly put the tax rate in or something like that, the state laws indicate that Amazon is not liable for the business, and that the business owner is still liable regardless of what Amazon did right or wrong. So this is all very scary stuff to that degree. The next thing that we've seen is that states have subpoenaed Amazon to turn over all third-party seller data. And then what they do is, when you try to register some of these other components, what they'll end up accomplishing in all this is they will, when they'll say, okay, so Jane Doe, you have a retailer sells bikes, as a hypothetical. We actually see you on our database. We think that you have a debt with us. And then they go right into the audit. Sales tax is not protected by tax treaties between the United States and the UK. The indirect taxes aren't protected. So if there's any issues, dilemmas related to income tax or some of these other components, those are protected and shielded, but the sales tax side you're still going to be liable for.
And going back to the point on, I suppose, Amazon, like you've said, if Amazon's not responsible if there's a pricing mismatch, right? But let's I suppose forget that, because like that I imagine might not happen too often. But either way, if all of the tax is being collected, or the sales tax is being collected correctly, should a UK seller worry? Like, is it actually still, are they basically compliant? Because what we have in the UK, people might still need to do a nil return or something to show that they've declared it. I don't know if that's the same in the US.
Yeah, the US actually, we have a great infographic that kind of helps explain this. It's called the sales tax dilemma, but effectively what we'll show you here is, everyone, when you hear sales tax, everyone thinks, oh, this is easy, it's going to be straightforward like VAT. It's actually anything but that. So if you can see my screen.
Yeah.
This is the complexity of sales tax. So everyone sees, okay, I register, collect, remit, good to go. Life is hunky-dory. They don't understand the gatekeeping. They don't understand the audits, background liability. Some states incorporate different taxes known as gross receipts taxes. So Washington has B&O, business and occupancy tax. Illinois has ROTS, retailer and occupancy tax. So there are other additional components that need to be remitted above and beyond just the sales tax in certain states. So Amazon does not remit any of these extra gross receipts taxes on your behalf. They only remit the sales tax.
And how big and frequent are some of those? Because that's quite a scary list, if I'm honest, seeing
It
like,
is.
what's that, like 12 different types of tax?
Yeah, or more. Yeah, I mean, so when you look at 10,000 taxing jurisdictions, within that jurisdiction, there's only anywhere upwards of 5 to 10 different categories of different types of taxes. So the fire department might have a tax in there, the police department has a tax in there, the library has a tax in there, the hospital has a tax in there, so on and so forth. So they're all aggregating into the total lump sum of what the tax is, and this pays for the state infrastructure. So they're all kind of tied, and they're all taking some of that revenue that comes in.
And is that all genuinely like, would most sellers expect to have all of this stuff if they are only selling on Amazon?
So key things that sellers have to have when you're looking at the US market, more than anything else, is if you're going to be serious about this market, you'll want to get an EIN at minimum. We don't advise getting an income tax or incorporating the US, because there are great benefits to the tax treaties between the United States and the UK that you can take advantage of as far as income tax is concerned.
Yeah.
So to that degree, we don't advise that. We advise getting an EIN, and then getting a US bank account so you can remit the taxes back to the states. The states use US bank accounts only for remission purposes, and that's because they use the banks as a way to gatekeep in case there's any illicit, illegal money activities. They're expecting that to be caught at the bank level.
For the uninitiated of us out there, like, what is, in the UK, we don't have an EIN number that I'm aware of. What are those? And also there's an FEIN number. What's the difference between the two?
That's a great question. I just draw a conclusion, assuming everyone understands US policy. So EIN is an employee identification number. So in other words, it grants you permission to be able to hire people or do other things. It's also a way for various different factions within the government entities to be able to recognize things and so on and so forth. In the US, we have a requirement when you register anywhere to submit what they call an NAICS code. And that NAICS code effectively tells the government what kind of a business you are. And it tells them how to recognize your operations and everything. So for example, if they see a tax return and it shows a gross volume of $1 million sales, but the taxable owed is only 0, and then they're going to go cross-reference and say, oh, NAICS, they're an e-com. Okay, that's why they're not doing it. So there's some things that the government gets pretty invasive on requesting, but it also helps shield you in the future as well.
Now, if it's an employee identification number or employer identification number, the next question that someone's going to have is, well, look, I'm not an employer in the US. I just want to declare some sales tax.
Yep.
Is the EIN number for, is it the equivalent of your VAT number in the US, or would you get a separate sales tax number?
So you would get a separate sales tax number directly with the state. They're going to cross-reference, and by the way, FEIN is federal employment ID number. So one is at a certain level, the other one goes all the way up to the federal level. Again, remind me the question you were asking, because I wanted to get that one data point back.
I was asking, the one before about EIN versus FEIN, or
yeah. So the difference between the two is the level at which you're doing things. And then your question was, is there an income responsibility if they have an EIN or something like that? And the answer is no.
It was more, I guess in the UK, you have a PAYE number, which is for employers, and you wouldn't need to register for that unless you were an employer. But because you said an EIN is employer identification number, it kind of doesn't make sense that you need one, right?
Right. So that's one of those weird differences, US versus acronyms or terminology, if you would, versus the UK. The employer identification number effectively just means that you have registered with the government. At least they know who you are, and you're able to do basic transactions in the United States with that information, because anywhere you go in the United States, they're going to ask you for that. Okay. So you have to supply that. That's just a component. Even when you go to businesses, they'll ask for your tax ID number, or US or whatever. And that's where you supplement that versus having a US based one. You're going to give your EIN.
On my door, how does it work? How does someone know that they're being audited in the US?
Well, if they're knocking on your door, Joseph, then we are wildly outspending our tax dollars. We should not be sending agents directly to your door in the UK. That's clearly a vacation at that point. A lot, most of the time, they're going to be they're going to determine their method of outreach pretty much by what kind of presence you have in the U.S. You know, if you've operated in the U.S. before, if you have any sort of offices in the U.S., agents in the U.S., anything that they can connect to you in terms of getting mailing addresses, phone numbers, or something like that. Generally, I don't think they would really use email. I think that would be up to the individual state agencies, state governments, if they were to try to make an email attempt. But again, that also harkens to the complexities of the United States. It's not just one, consistent rule or procedure. Definitely not knocking on your door, but could be several different means depending on what kind of presence you've had that they can connect you to.
Okay, but realistically, if you are an Amazon seller, and I'll move away from Amazon sellers next, but would they really be chasing you if you're, effectively it should just be a nil return, right? What's the sort of risk that people are facing here, especially if they're, I suppose, below $1 million in turnover?
I would say if they're strictly 100% Amazon and they're sub $1 million, you're looking at an accumulated liability that's not going to be very big, because $1 million, sub $1 million spread across the US. It's not like it's all $1 million in California or New York. It's going to be 25% California and another 10-20% New York, and then aggregated and broken down amongst the United States. So the reason why we use that $1 million threshold is that it's kind of an area where, okay, your accumulated liability is not going to be worth the state's efforts to go after it. So one of the things that we usually say is that, just like anything else, it's a business. The state has employees and they're expected to yield certain results, and they're expected to generate revenue back to the state. That's why they're there. And so, to that degree, with that level of complexity with these types of individuals, they're out there actively pursuing. If it's sub $1,000, they've already wasted their time and money on that audit.
Selling on, say, a Shopify store, the goods are stored or produced in China, sent straight to customers in the US. Does that seller have any sort of liability or obligation to report and remit anything in the US in that instance?
It's interesting that you say that, because Alibaba got popped by the US, and they got popped pretty hard.
And by popped, you mean
they got caught for not collecting any sales. They were like, "Oh, we're a Chinese-based company. We don't have any sales tax responsibility." And the US is like, "If you want to sell in the United States and not get blocked, you're going to go abide by our laws." So, when you're dealing with the tax revenue and some of these components, I would say it depends on the dropship model. So if they're drop shipping, if you're using like Walmart in the US or eBay or other stores to source your goods, and then listing them, on Amazon or Walmart or so on and so forth, what's going to happen in those environments is that you're going to have to pay sales tax for your goods. And when you have to pay for your goods in the US, that's where we become a revenue generator. Now, if you don't have any presence in the United States, then the only thing you really have to keep an eye on is what we call economic nexus. This was a new thing that got introduced in 2018. Well, prior to 2018, but the Supreme Court in the United States agreed that it was legal after 2018. Economic nexus is effectively that you do a certain de minimis volume, either sales or transaction count in a state. And so where retailers in the UK need to be concerned is when they start hitting those different nexus thresholds.
And what sort of level are those thresholds? Are they different for each state, or are they just the country as a whole?
Like everything's fragmented. if I was giving an average number, I would say it's about $100,000 US, or 200 transactions in a calendar year in the United States.
And so $100,000 sales in the year. So kind of
correct, in that state specifically, not the
okay.
entire. So it's a pretty big number that you're going to have to hit.
Okay. And so I suppose to reiterate, if someone's drop shipping, they've got their own store rather than selling through Amazon, they would need to be kind of monitoring these thresholds per state. Is that?
Yes. As far as economic nexus is concerned, absolutely.
Be if their suppliers are based in the US and they're drop shipping to US customers. So would that be kind of like a trigger that someone's instantly got to register for sales tax in the US if they're using US suppliers? Like, would it trigger the nexus?
No, it won't trigger the nexus, but I mean, it'll just be a loss leader for the business, because you're effectively paying the sales tax for your client.
In what way there? Sorry. So
when you require the goods from Walmart, for example, they're going to charge you sales tax for those goods. So then turn around and list on your store. And then, the expectation is, or the way we counter this is that you register with that same state. And then what happens is Walmart's going to charge sales tax to you, but you're going to charge sales tax to the client, and you're going to offset what you paid to Walmart. The delta.
Cool.
Yeah. So, and then the delta will be, what you end up paying to the state. But outside of that, what you paid to Walmart now at this point goes back into your operating expenses.
Interesting. So it's similar to that in the UK then, in that if you've paid it, you can reclaim it. Is that
correct?
Okay. Okay, cool. I'll just have a look at, I'm not sure if you guys have seen the questions if they've been coming in.
So the question would be, are you registered or not? If you collected it and you're registered with the state and you pocketed it, that's called tax fraud in the US. And that gets a lot of very unhappy people on your back that you don't want, because you're impersonating the state, and you've now, as an agent of the state, pocketed state revenues. So good.
I guess though they might say, well, what if they didn't? Because in the US, sales tax is added at checkout, right? So in that case, yeah, you're impersonating someone. But what if you just say, well, it's $10 plus, and there's no tax? What happens there? So they've not impersonated anyone.
As long as there's no tax component involved, you're okay. But if you charge tax in any form or degree and it's line itemed as tax, then you have to, report it if you're collecting it.
And if they didn't add the tax on it and they later register, again, let's say they'd sold it for $10, would you then would your $10 selling price absorb whatever the backdated taxes are, or would the US say, well, you didn't charge it, you don't need to pay it?
No. US is much more aggressive than that. They are very, very aggressive on that subject. And not only that, they get really happy and excited when they see those, because they know they're going to hit P&I. So the long and the short is no, on that subject, it's no aw shucks kind of thing. What happens is the business accumulates a liability. And there's a term in the United States, the legal term is successor liability. Effectively, that business maintains that debt regardless of ownership. So if you try to sell that business down the road, let's just say hypothetically your business is worth $1 million and you owe $200,000 to California. An investor is going to analyze that and say, okay, we're going to reduce your value because you didn't collect this stuff. What's funny about all this is that it's supposed to be the US clients that are paying that sales tax, not the actual business. But because businesses are so caught up in shirking and getting away from it, they fail to understand the fact that this liability they don't have to accumulate should be paid by their clients.
Yeah, so their end customers should be paying it at checkout rather than and then a lot of our clients use two kind of banks, but they're more like fintech providers. So Payoneer and TransferWise. And he's asked, do they work as a US account for the purposes of paying sales tax?
So we use both tools to compensate different employees. We have all across the world as well. Unfortunately, no. And here's why the no. those fintech providers aren't licensed banks in the United States. They're what they call money market accounts. And so they're not subject to the same legislation, and they're not protected by FDIC or any of that other stuff like an actual bank is. The states wanted to go through the actual bank because they want the bank to actually vet you, make sure that you're not dealing in illegal terrorist activities or anything that might be, or laundering money or narco, whatever have you. So the states use the banks as a way to vet the retailer, as a way to make sure they're not dealing in anything illicit or illegal. And so that's why that criteria is so critical. That being said, we're starting to see more services roll out that can actually create US bank accounts, whereas before it was impossible unless you went in person. One solution that we've been familiar with is called Dula. We've seen them simplifying that aspect of things. And then we've been investigating OFX, which is an interesting solution as well. They do have a Bank of America US bank account. They do have the ACH credentials and those kind of things. So right now, in the short term, those are the two solutions that we see that will grant you the ability to get a US bank account without you having to actually fly to the United States and open one.
In terms of the payment, would it be one payment, or would you have to make a payment to each individual state? Does it go to the federal government and split, or?
Each state is unique and has nothing related to the other one. And so they all operate autonomously. And it gets even worse because if you look at Colorado, just so they have what they call home rule districts. And to make it even more frustrating, these districts within the state of Colorado said, we don't want to work with the state, so we're going to just be our own states. So,
that sounds like an absolute headache. I'm glad that I deal with that. And I know there are two states in particular that are 0% corporation tax, Delaware and Idaho, if I remember.
Close.
Wyoming.
Yep.
So I guess the first question that most people will have for a US accountant when they hear this is this true? If I form a US entity, will I have 0% tax to pay?
You won't have, well, yes and no. You will not have state income tax to pay, but you'll have federal income tax to pay still, because the feds don't care what the state laws are. So that being said, again, though, this is an area where, depending on where you're located, if you're in the UK, unless you have a reason because you have employees in the US, I'd be very cautious about getting incorporated in the United States, because then you're trading off some of those tax treaties, or you're adding extra layers or steps in recouping, being the named party for those taxes that you paid previously in the United States.
But what's the so if it's 0% state corporation tax, say in Delaware, what's the federal sort of tax then? Because in the UK it's currently 19%, going up to 25.
It's not that low. Unfortunately,
It's not that low.
You're thinking very straightforward.
It's because we get genuinely lots of people see that 0% and then say to us, well, why should I form a UK company? I'll just form a US one. So the feds come in, they want their money, because now the states have come in with their hand in your pocket. Now the feds want to come in with their hand in your pocket. It's actually kind of interesting and funny. Don't tell the rest of the US this, but everyone's so caught up on death and taxes and not having to pay taxes that they don't realize it's so fragmented. When you actually aggregate all the taxes, it ends up being the same amount that you end up paying like full income tax in the UK or in Canada or whatever have you. They just get the allure that they're not paying that big amount. So the percentages are always smaller in the US, but there's a lot of them that aggregate into the total amount. Right. Okay. And what's the ballpark total then?
Depends on how good we are at our job. Because there are loopholes, there are various different ways that you approach this. I mean, and it also comes down to their tax bracket. How big are they? What are their volumes? It could be very small and can go all the way up to now. I think the Dems are pitching a 50% business corporate tax, is what I was reading somewhere. I have to go back and look. But so they're the new thing right now in the US is to saddle corporations with tax debt requirements.
Wow.
I I think the corporate what was it, the corporate income corporate tax rate, I think as of the end of 2022 was floating around the 20% mark, 21%. And I think it's a maximum tax rate of, what is it, 35%, Peter?
Sounds about right. Yeah. Yep.
So wow, yeah, quite substantial then still versus that 0% that people hear.
Oh, and it gets better.
It's just like when they say that the US is the streets are paved in gold. They're really not. It's quite filthy out here. So fool's gold, exactly.
And so to answer Tyrone's question, he mentioned that could you advise on opening a company in Delaware? Would that mean we only pay according to Delaware or the states in which the buyer's in? So I think what he might mean by that is if he forms an LLC or a C Corp there, does he only need to worry about the sales tax in that state, or would he still need to worry about it elsewhere? And Tyrone, let me know if I've
he would still
misunderstood.
need to remit an income tax return in the US with the feds. He should be able to recoup some of that with the tax treaties, or majority of that, if you would. It does, the thing here though is, unless he has a strategic advantage to incorporating in the US, we usually don't advise it, because you're just opening yourself up to a whole lot more headache and a whole lot of other world that now you have to comply with.
I need to record that next time for someone. Tulin, one of our team, has said that from what she understands, if you're a non-US entity and don't have a US nexus, i.e. a warehouse in the US, you won't have to be liable for US sales tax. Would you need to file a W-8 form to prove this? So I'm guessing we kind of touched on that with the US nexus being, is that it can actually be not just a physical presence, it's a sales volume. But I guess the W-8 form, I suppose the first question now, what is the W-8 form, and
W-8 Ben. It's a W-8 Ben form, which is it's effectively international seller. It's a form they have to submit when they get the EIN. So she's accurate in knowing that part, the income component, or he is. The only thing here that she missed is that she's only accounting for physical nexus in her assumption. You have to aggregate the economic nexus as well. So if the store, if they don't have any operations whatsoever in the United States, and they don't have the sales volumes, then they don't have to worry about it. But if they're starting to hit sales volumes in the US, then you definitely want to pay attention to it.
And the physical part of it is, I think we might have covered this, but just to be sure, if someone stores goods at Amazon, is that physical nexus?
An oversimplification, person, place, or thing operating within that state. Cool. And that's referred to by the Supreme Court as the bright line test. So when they originally ruled on the first time over Quill Wayfair and said it was illegal to do it, the bright line test was if there was a person, place, or thing operating in the confines of that state, then there is a physical nexus and a responsibility to collect and remit.
And Mr. or Mrs. Anonymous has also asked or reiterated about hitting the thresholds. How do we actually pay it? I guess the answer would be get in touch with you guys and you can help them register, and physically they can pay it through creating one of the bank accounts that we spoke about.
Marketplace laws are a little bit more unique than your typical retailer. They're subject to additional legislation and other components. And to your point, as a marketplace, one of the benefits is you want to get into that room if you get big enough and say, hey, we kind of like a couple extra points here. So there's some things there that you can do.
And for anyone listening, I know sometimes it's difficult to give like quotes on pricing, but like what's the sort of budget someone should have in mind, whether it's with you guys or someone else, in terms of sales tax compliance? Because I think what can be scary as a seller is you're like, there's 50 or so states, there's all these returns. Am I going to be paying hundreds or thousands of dollars a month basically for all of this? So what's the
old school model with some of the, what I'll say, legacy solutions that were kind of stuffy and outdated? They'll charge you through the nose. You're looking at, with us, probably somewhere ballpark 10 to 20,000 for the year. and depending on, you know, the complexity of the compliance requirements. So if you're selling like oils or energies or something like that, that's going to be a complicated subject. But you're in energies, you're printing money. If you're, you know, selling basic products or other things, you know, something tangible or something like that, that let's just say hypothetical napkins or something like that, very different story, and you're probably not going to have as big a need because it's going to be very straightforward.
So 10 to 20,000 a year to be like fully compliant in the US. Now, I think many people listening to this might be like suddenly falling over, like, oh my God, even Stephen now's had to go offline because he's shocked. Is that kind of standardized across that sort of ballpark? Because it feels like a lot, I think, and I'm not, you know, not to
No, not at all.
pricing, but as a seller, you'd say, well, I'm actually not, like Amazon say is collecting all the VAT and remitting it. Like it seems crazy to then, it's why a lot of sellers that I speak to do bury their head, I think, in the sand, because
Why? Yeah, I totally get it. So the why is very simple. Our prices don't start out, I'm giving the average, if you would. So marketing likes the mass pricing with, you know, okay, it's only $124 a month for the smallest retailer and $29 for filing, which is what our fee is actually. And then what happens is that it aggregates somewhere between 1,000 to 2,000, give or take the level of filings that we have to do for them. So it's that 29 times whatever it is, that really makes the fee fluctuate. And honestly, the biggest thing that's going to have it go higher is if you're in a field that's very complex and you're selling specific products that don't have excise tax or other components aggregated along with it.
okay.
So for smaller retailers that are sub-million, I'd be surprised if they spend more than $6,000 a year with us.
Okay, thanks for that. And yeah, I appreciate it's sometimes difficult to give any sort of pricing up front, but I'm aware we've got 3 minutes officially left. Since this is the first webinar we've hosted, I don't know if Zoom just suddenly yanks everyone and kicks them out, or whether we have a chance to roll over slightly. If we do have a chance, if it's good, okay with you guys, there's a couple of other questions, but I'll probably give you a chance now to, I suppose, let people know if there's any closing points that they need to be thinking about, and how to get in touch with you guys.
Absolutely. Don't just draw conclusions or assumptions. Come talk to us. We offer, one of the benefits we're going to offer to your community specifically is if they mention your e-commerce accountant's brand to us, we'll do a free Nexus evaluation for them. That's an easy couple $100 value. Effectively, what we'll do is we'll look at what your sales are in the United States and tell you where, if and where you have exposure to deal with it, so that you're not just guessing, you're not just spending all night up all night trying to figure out or concerned about the subject.